Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, September 12th. Hope you guys are having a wonderful day here. We got a couple items here on the economic calendar, so we'll kind of jump right into it. We got the numbers from the inflation. These are inflation numbers from the wholesale. So this is the Producer Price Index, also known as the PPI. It doesn't have a weigh a lot in terms of the movement of the marks, but it's something we definitely like to take a look at. It doesn't because it doesn't primarily translate to the consumer side. Even though we see sometimes inflation has upticks on their side of things, it doesn't always get passed over to consumers. So that's why it doesn't have as big a weight. But sometimes the trend is there, and if we see it go up, we'll see the consumer side go up over time as well. So it's something we do kind of keep an eye on. So as you can see, back in July, we had basically it was nil. There's no increase in the inflationary number. So forecast for August is supposed to have an uptick of 0.2%, and instead of going up, it actually went down 0.1%. So we had some pretty big drops in the producer price index. So it'll be interesting to see once we get the CPI report if there will be a drop in CPI or if that will be or where that goes. So it'll be interesting to see how that will translate to the consumer side. But again, something kind of good news in terms of inflation, showing that it's not going out of control, it's not running off yet. So obviously that's a good news. Later today, by 11 o'clock Pacific Standard Time, we'll get the Fed base book. This will kind of give us a gauge as to the different regions, what's going on economic-wise in the different regions of the U.S. Kind of give us a little bit more inside look. So that could be something that could move the markets later on. There's not a lot of data out there to kind of really move markets. So kind of taking more of the headline news, which you could kind of see here. The stock market is currently mixed, and that one index that's down is actually the Nasdaq, and Apple is kind of leading that charge. Is kind of leading the drop, just a schedule ahead of its conference regards to the announcement of its new iPhones. So it's been up about year for this year about 30%. So it's probably just taking a little bit of a breather right now. There's really no rhyme or reason why Apple should be going down. It's just probably taking a bit of a breather before it could potentially take off. So kind of a knee-jerk reaction here. We also got talk about Hurricane Florence as we see coming into the east coast of Carolinas. We hope everyone is well, and hopefully it won't be as big of an impact as a Category 4 would indicate. So our thoughts and prayers are with those folks there. I spent time in North Carolina, so I understand what these are like. I went through Hurricane Fran, so I definitely can relate to what those people are feeling and what those guys are probably going through. So again, thoughts and prayers are with those people. Hope everyone is safe and sound, and we'll get through it as we go. To kind of move on here, the reason why that's kind of mentioned is also is this is getting energy stocks and stuff are going up as a result of it, primarily because it's interfering with stock prices or oil is going up as a result. So they do have some oil rigs out that way, and it can tighten up the control or have an influence on the production of oil here in the U.S. So as a result, oil prices kind of crept up a bit, which is also going to lead into other stocks, helping other stocks as well. We do got quite a few Fed speakers out there. Mr. Bullard spoke earlier today, and he's not a voting member, but he kind of indicated that the Fed's not listening to the stock and bond market. Now, it's interesting to note because we did see one Fed speaker. We have a few different grounds here, and there's been a lot of talk about this yield curve with the Fed hikes getting us to basically a flat yield curve, which their next meeting, I guess it's actually October. I think I was saying September, but it's actually in October. That will lead us into a flat yield curve, and then if they go ahead and raise it again in December, which is very likely, that will lead us into a negative yield curve. Now, over the past, we've seen it kind of is a leading indicator of a possible recession ahead. What that means is when we see a short negative indicator or negative yield curve, that means that the short-term rates are now higher than the long-term rates. So we'll see that here in mortgage properties where the 5-year ARMs and some of these ARMs are going to be higher priced than the 30-year fixes, and that's kind of what that translates. So, and that usually is an indicator again of possible recession. And he feels that Bullard had kind of made comments that maybe we should slow down or kind of watch what the market indicates, economic calendar indicates. But there are others that with the sentiment saying that want to get back into a neutral policy. It's just the method of getting there, and it seems to be that there's a few different ideas as how to get that neutral policy as we're kind of nearing this flat to negative yield curve in there. So that way, maybe we won't hurt the economy and have to go backwards and try to get out of recession. So again, this will be interesting to see what comes up in the near term here. See if it does lead into it. Again, we were hearing from a few other voting members actually were saying they really simply don't care about negative. They don't feel it's going to hurt the economy or that. So again, we'll have to kind of wait and see. Here's the bond market. The bond market, we had a, it did drop a bit. It did drop below here, but part of it is 9 basis points. We have to raise it about 9 basis points because that's where if you remember watching the video yesterday, we talked about a bond rollover, and what the bond rollover basically translates is they do a reset in the pricing. Now, it doesn't mean the interest rates are affected by it, but it had about 9 basis points. So if you raise this by 9 basis points, we're kind of about where we are now. So we're at this level here, so we're at the floor of support. Now, this has been a kind of a strong support here, but if we can break above that, have this floor here, it will definitely help out bonds, maybe give us a little bit more of a boost higher, especially now that we're in sold position here, and hopefully get a positive stochastic crossover. We haven't received it yet. We had a few teases here, like here about 2 days ago. We saw it, and right now we're kind of about on even level here. So if we can get that positive stochastic crossover, we'll kind of see rates improve a little bit. So that means when mortgage-backed securities go upwards, that will help mortgage-backed securities or interest rates improve a bit. So again, right now we're about even where we left off yesterday. There's really no pricing difference where we left off when you factor in the bond rollover. And again, the bond rollover is a reset, so as you know, they package them up, they sell them on Wall Street, which is why we see bond or interest rates fluctuate throughout the day. Many people may not know that, but like the stock market, pricing for interest rates do change throughout the day here, and this is kind of like what it is. This is why I show you these charts here, these Japanese candlesticks here to kind of show you where the trends are at. All right, so let's take a look here at the 10-year. As you can see, we got plenty of room in both directions to go. It's down a little bit today. We're down to about 2.96 level, almost to 2.95. And again, it's kind of in the middle here, so it could take its cue from either direction, and it's kind of an bought position, and it could have a negative stochastic crossover, which could help out bonds as well. So that wraps things up. If you guys want to see more data, come over, or want to get more information, just follow me at Twitter at Mike Bjork. You can get the updates as they come, and I'll post on Twitter. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.